So many of us get our life insurance through work, and we just check the box. We think, great, I'm covered. And hey, it's a fantastic perk to have, no doubt about it. But is that workplace policy really enough? Is it the solid foundation you think it is for your family's future?
Quick heads up before we start, this explainer is AI-assisted with human oversight. So let's meet Sarah. She's a professional, she's got a great job, a family she adores, and a pretty sweet benefits package from her company. And just like most of us would be, she feels secure. She's confident that the life insurance she has through her job has her family completely taken care of. And you know what? That's a totally common and completely understandable way to feel.
All right, so here's the path we're going to take today. We're going to follow Sarah's journey, starting from that cozy feeling of her workplace plan all the way to the big aha moment when she discovers what it really means to own her protection. We'll look at some amazing benefits you've probably never heard of, talk about the serious cost of waiting, and then figure out how you can choose your own path to real security.
Okay, let's start right where Sarah is, and frankly where millions of us are, relying on that easy, convenient employer-provided plan. It feels good, right? Like a solid shield protecting our families.
This is your typical group plan. It's super easy, usually no medical exam, and sometimes the company even pays for it. So for Sarah, it feels like a major financial to-do is checked off her list. But here's the catch, the thing most of us don't think about. That entire sense of security is resting on one single and potentially shaky foundation, her job.
And this brings us to the crucial moment of realization. The one question that really changes everything for Sarah and for anyone who's banking solely on their workplace benefits.
The simple answer, and honestly it's a surprising one for a lot of people, is no. It's not yours. You don't actually own that policy. Your employer does. And listen, this isn't just some technical detail. It has massive, real-world consequences when that foundation, your job, suddenly changes.
Think about it. What happens to that coverage if you decide to change careers, or you get laid off? What if you take that leap and start your own business? Or when you finally get to retire? In almost every single one of these cases, that life insurance policy you've been counting on for years just vanishes. It's gone. That safety net disappears, often at the exact moment in life when you might need it most. So this realization is what leads Sarah to look for a better way, an alternative. She starts exploring a personal life insurance policy, one that she controls, no matter where she works or what her career path looks like. This is the big shift from temporary protection to true, lasting financial ownership. I love this analogy because it just clicks. Think of your employer's policy like you're renting an apartment. Yeah, it's convenient, but it's temporary, right? And you're not building any equity. The second your job ends, the lease is up and you're out. But owning a private policy, that's like owning your own home. It's yours. It's portable. You can take it with you anywhere. You can customize it. And it's yours to keep. It's a real asset that you control. So in her research, the first thing Sarah learns about is term life insurance. It's pretty straightforward. You get protection for a specific amount of time, say 20 years, while the kids are growing up and you're still paying off the mortgage. It's usually more affordable, and it's designed to cover those big needs that, have an end date. But then she discovers permanent life insurance, and this is designed to last your entire life. This is where that whole owning concept really hits home, because it not only provides that death benefit for your family, but it also builds up a cash value account over time that you can actually use while you're still alive.
All right, now, this next part. This is where Sarah's entire understanding of life insurance gets completely flipped on its head. She thought it was only about what happens after you're gone. But what she found was an incredibly powerful feature that can protect you financially while you are very much alive.
It's called living benefits. Basically, it's a feature that's often built right into private policies, usually at no extra upfront cost, that lets you access your own death benefit early if you have a serious medical crisis. This is a total game changer. It's something you almost never find in a basic employer plan, and it means your life insurance is there to protect your life, not just your death.
So what kind of situation are we talking about here? Well, we're talking about the big, life-altering stuff. A terminal illness diagnosis, a chronic condition where you can no longer care for yourself, a critical event like a major heart attack, stroke, or cancer, or even a severe cognitive impairment like Alzheimer's.
Let's make this real. Let's talk about John. At 55, he gets diagnosed with a permanent chronic illness and can no longer do a couple of those basic activities of daily living on his own. Because he had the foresight to get his own private policy with this feature, he files a claim. He gets a big, lump sum, tax-free check that he can use for anything: medical bills, modifying his home, replacing his lost income. Now, his death benefit is reduced, but he got the financial help right when he desperately needed it. Now Sarah starts thinking about another path. What if she just waits? Rely on the work policy for now, and then just buy a private plan when she retires. It seems logical, but as she's about to find out, waiting comes with a very, very steep price tag.
Here's the most important thing to understand. Your two biggest assets when you buy life insurance are your age and your health. Right now, today, look at this example. A healthy 40-year-old might get a policy for, say, $75 a month. But if you wait to buy that exact same coverage at age 65, that premium could explode to $450 a month or even more. You're basically locking in your price based on how young and healthy you are today.
And hey, it's not just about the money, as crazy as that is. If you wait, you're running the risk of developing a health issue that could lead to all kinds of limitations or exclusions. Or you could just get denied coverage altogether. By the time you need it the most, it might be totally unaffordable or completely unavailable. And with those permanent policies, you've missed out on decades of potential cash value growth.
So, after going on this whole journey of discovery, Sarah sees things in a completely new light. The goal isn't just to have life insurance anymore, it's to own a financial foundation, one that's stable, that's portable, and that's going to be there for her and her family throughout her entire life. There's this quote that just says it all, doesn't it? Being proactive is everything here. Getting a policy when you're younger and healthier is, without a doubt, the most effective and affordable way to build that rock-solid foundation of protection for you and the people you love.
And so we're going to leave you with this one question. Take a hard look at your own financial plan. Is your safety net, the one you're counting on, truly yours? Or is it built on rented ground that could disappear the moment you change jobs or decide to retire? Answering that question is the first, most important step toward truly owning your protection.